with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we'll have half an hour of business news and analysis. On today's show, forceful response. China says it will take resolute countermeasures if the United States continues to escalate trade tensions. And stabilizing the markets, China's state fund Central Huijin says it will play the role as market stabilizer. And now let's begin with our top story. China's foreign ministry says it will take necessary measures against the latest tariff threats from the United States. Spokesperson Lin Jian said China will fight till the end if the U.S. persists with escalating tariffs. And among the U.S. tariff hikes, China has released a white paper outlining its stance on key economic and trade issues with the United States. So what does the U.S. tariff policy mean for the global economy? And what will be China's response to the U.S. actions? So for more on this, join us on the line now, Zhou Li, Associate Professor of Economics and Finance at University of Macau, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. So Dr. Zhou Mi, I will start with you. China has announced to impose the additional tariff on goods imported from the U.S. What does this tell us about China's overall position and how China is going to respond to this tariff issue?
These kind of problems are raised by the United States. I think that for China, it is always very clear that we are going to deal with the situation, including the relation between China and the United States under the platform of a multilateral system of WTO. So any practices should be abided by our promises and commitments to WTO. We want to follow the principles of WTO as most favored nation, the MFN principle. But in this regard, I would say doesn't have to say that we were not trying to neglect the benefits of the Chinese stakeholders. So what we are going to do is, according to the law, the foreign trade law of China and also other laws related to the international trade. We have to protect the Chinese stakeholders, including the enterprises and consumers. So we are saying that the United States has raised these tariffs without any reasonable reason. I think it's a very bad behavior. So we have to do something to protect the Chinese stakeholders. That is the principle that we are going to enact for the additional tariffs or any other practices.
And also Beijing has released a white paper outlining its stance on the key economic and trade issue with Washington. So what core message does China send?
Right. So the core messages are fourfold. One is that the white paper highlights the mutually beneficial nature of China-U.S. trade. And second, it also voiced the support for free trade, for international multilateral trading system. And third, it warns against the harms of unilateralism and protectionism. And finally, it really urges to use dialogue to resolve these disputes. And so it's very loud and clear that they have been talking about the harms that Washington is now imposing these tariffs, sweeping tariffs on not only China, but, as you know, 185 countries in the world. And these tariff wars, according to the white paper, trigger market volatility, fuel inflation in the United States, erodes its industrial base, and increases the risk of economic recession. And ultimately, the U.S. would only suffer the consequences itself. So it's quite clear that, this tariffs will going to produce boomerang effect and hurt the U.S. instead. And on the other hand, China is going to continue to support a multilateral system and open the window for negotiations if the United States shows respect and also to establish any credibility that any negotiations will take effect. The U.S. will not be reneged on the promises, which I think at this point in time, that kinds of trust, it's very much in the short supply.
And Celine, so let's take a look at the Trump's tariff. Are you concerned with its potential challenge to the global multilateral trading system?
Yeah, of course. That's a very hot topic. So, I mean, the tariff itself is not the tariff it used to be. So 1.0, they are mostly targeted on the trade. But now it seems to be the collapse of the international finance. So which countries could be negatively affected more by this increased tariff? I think the US GDP, of course, will be dragged down by most about 1% by estimations. And also European country will drop down by half point. So I think this kind of the situation is so bad because the trade, we needed to rebalance. But good news, also, the US only count for 11% to the global trade in 2023, while China count is a big players in this market. So if China want to rebalance between this kind of the international trade for this tariff threat by the US, I think the global, at least for the trade, will be towards for the Chinese side.
So yeah, so are you concerned with this, its potential challenge to the global multilateral trading system?
Well, yes, I think as Trump decided to put a 90 days pause on those higher tariffs on the 60-ish countries. And so now, other than China, all other countries will be faced with this 10% of the tariff. Now, I think the market has sort of breathed a relief. But at the same time, when you think about this 10% tariff across the board, plus some of the sectoral tariffs like automobiles, like steel and aluminum, and also not to forget that the tariffs that were threatened to be imposed on Mexico and Canada are still in place, right? They're just having a pause. And so I think what that means is that even though right now we're temporarily off the hook of this very large, trade, sort of the barrier, the tariffs, we still don't know what would happen 90 days later, right? So I think that really much heightened uncertainty is going to, in many different ways, affect global trade, affect global supply chain. Not to mention, again, the United States basically single-handedly trying to really rewrite or destroy the current sort of rule-based, however imperfect that is, but at least it's more predictable way of doing trade. And so now I think the whole world is wondering if the United States, what it's going to do with the tariff, right? And not to mention the largest two countries in the world, the US and China, China's position has been consistent. If you bully me, right, I would have to fight back. There's no other alternative. So I think the multilateral system is very much under strain, to say the least, given all this uncertainty, given the United States, completely irresponsible, very precarious, very unpredictable way of dealing with the trading system and the high tariff between the two largest economies in the world. I think, the trading system is completely, I think, revamped. It's not going to be the same as we know it.
And Dr. Zhou Mi, so what do you think will this be, potential impact on the global supply chain and global trade?
Well, we know that internationalization are based on certain kind of factors. First of all, we should have some common understanding about the nature and have some commitment. And one of the main principles and practices for so many countries in the world is to decrease the tariffs in the past, in the previous decades or even 1 century. I would say that is a trend that many customers, many enterprises are getting used to that. So they are trying to improve their certainty according to the promises. And second factor is that we are seeing the technology are improving, and we are seeing better transportation methods, and even the e-commerce happened. So if we are saying that there are some reverse about these trends, I would say that is definitely will increase so many uncertainty for the global supply chain. As the experts have explained that we are looking at the tariffs scenarios, they are changing very quickly, not just in 1 or 2%. They are changing in maybe 10 or 20 or even more percent. And that is really making it more difficult for the stakeholders along the supply chain to make a prediction about the future. So how can they prepare for their stocks? How can they prepare for the future processing? I would say that is definitely a disaster for so many enterprises, because many of them are trying to reduce their stock in the previous decades, but now they have to change the method of management. And another very confusing and important impacts is about the trust. We know that the international trade only happened when everyone has some trust on each other. But without the trust, how can they believe that their payment, their delivery of the products will be paid? I think that is definitely a very tough problem we have to answer, and we have to address. So the global supply chains are under so many uncertainty. I would say it will cause some of this pause or even stop in certain areas, and that's definitely a bad thing for the related stakeholders, including the consumers and enterprises.
And Yan, so you are in the United States. So for Trump's tariff policy, what are the effects on the U.S. consumers and its economy? Can it really bring back the manufacturing to the U.S.?
Well, I think it's very clear that the impacts on consumers are negative, right? Because the tariffs are essentially a regressive tax on consumption. So the higher the tariff is, that means the higher the prices are going to rise. As a matter of fact, the White House has cited some research, except that they put in the wrong number. But the research that they cited is that basically the tariff passed through, it's about 0.94. So in other words, if there's $1 increase in tariff, then 94 cents will be passed on to higher prices, right? So the consumers eventually are footing the bill, especially, the U.S. Consumers rely so much on China for consumer goods, especially electronics, furniture, toys, you name it. Just wide a range of products are coming from China. And so earlier, the Yale University has a consumer finance lab, and they crunched the number and said basically all this tariff is going to cost American families an extra $3,500 per year because of the tariff effect. Now, again, the tariffs on other countries have been now put down at only 10%, but still this very high tariff rate on China is going to cost consumer extra, right? From iPhone to household appliances to shoes to any numbers of consumer goods are going likely to see price to go up. And that's why you saw the last weekend, about 4 million Americans are joining the so-called hands-off protests against all these very reckless Trump policies. Now, the question about whether or not the U.S. is able to manufacture these products at home to substitute for the imports from China. Well, I mean, it's clear in the short run, this is not going to happen because so much uncertainties. Businesses don't want to invest right now. They don't want to invest in Vietnam. They don't want to invest in the United States, not knowing, how the global supply chain should be rearranged. And giving all this policy uncertainty, it doesn't make sense for businesses to set up the factories and start manufacturing these products at home. Mm-hmm. Now, in the medium and long term, I still very skeptical for at least two reasons. One is to think about tariff is a protectionist policy. It does protect the market, but when you have a protected market, it doesn't mean the producers are now willing to expand production and drop the price for the consumers. They could easily just keep the low level of production with a high price and enjoy the high profits. So there's no reason for producers to now decide that they wanted to produce more just because the market is being protected against foreign competitors. And the second reason, of course, is that, to be able to revitalize the manufacturing sector, the United States needs to do a lot more than just by erecting tariffs. They need to have well thought out industrial policies. They need to train the workers and, shift the workers around from service sector to manufacturing sector. You also need to have, cost effective, sustainable energies and so on and so forth to run the factories. And none of this, I think, is currently in the plan by the Trump administration. So I think it's very doubtful that, the domestic production will rise in the short term, in the medium term. to sort of replace the imports.
And so, Sili, actually, stock markets around the world, they have dropped significantly in the wake of Trump's announcement. And on the U.S. stock markets, there are also been, huge losses. So why the markets are responding in this way?
Oh, I think the easy answer should be like as Yan has pointed out, the expectation is so risky, and also people hate for those uncertainties. So if you don't have the confidence in the futures for the long terms, the market will be response in the correct ways, saying that they are kind of the risk on mode. So investors are very afraid, are very fear of any kind of the risk, especially for the uncertainty part. So yeah, the U.S. market has been the worst market since 2025. I guess the European and also Chinese market has been picking up. So I think we should go for the East as well. So as I said, not necessary for the Chinese market, but you can at least put some kind of asset in the Chinese capital market will benefit you. And also for the German market, for the Euro market, because they are trying to use the fiscal policy, as Yan pointed out about the industry policy is very important. So I believe since I'm in China, let me talk a little bit of things more than for the Chinese market here. So I guess the earning expectations is going. So we are at a golden age for the Chinese capital market, because after the COVID, I think the earning report has been very low, like 13 consecutive quarters. But now I think it is turning better. So this is a kind of the evidence that in the first time the earnings has become positive in 2024 quarter four. So this kind of the earning days in April are very important for investors to see whether they confirm the Chinese growth are being showed in their earning reports. So this is the first point. So that's why I guess also the treasuries, the ETFs are most welcomed by those foreign investors. The PBOCs are still very moderately. They just drop the monies a little bit more than before. So this kind of the midterms purchase by those PBOCs is very moderate. So we still have a large room for the monetary policies in China. So that's my point. So if the US market is not that good, so maybe you should consider other market not to overweight for this US.
We are speaking with Zhou Sili from the University of Macau, Dr. Zhou Mi, Senior Research Fellow from the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. And after a short break, we'll take a look at China's measures to stabilize the capital markets. Stay with us. You're listening to Biz Today. I'm Zhao Yang in Beijing. China has unveiled measures to stabilize the capital markets. The move is in the wake of the global financial turbulence triggered by the U.S. tariff policies. Chinese state-owned capital firms have moved quickly to increase their holdings of the domestic equities. The People's Bank of China also announced liquidity support through relending facilities. And Central Huijin Investment once again increases holdings of exchange-traded funds or ETFs. So, Yan, we've been hearing a lot about Central Huijin stepping in. So tell us more about it. Is this China's stabilization fund?
So the Central Huijin is a sovereign fund that is basically now entering the market and purchase the ETFs that you just mentioned. And the data has shown that they pretty much accounted for now about 6.4% of the market turnover. And so, with this large amount of buying, but also I think the central bank has signaled that they will provide liquidity for companies if they're doing stock buybacks. So all of these, I think, help to boost the market sentiment. On the one hand, the stock market basically it's moved in the short term, the very short term by sentiment, right? And in the longer term by liquidity, and then even longer term by the real performances like earning ratios of the companies. But so in this very short term, just by announcing that the government is supporting to booster the confidence and stabilize the stock market, I think this has already been really effective in stemming the market free fall. So we have seen, for example, after these moves, the Hang Seng index has rose by about 3.5% after the worst day on Monday. And then the CSI 300 also rose by 0.7% after a 7.1% plunge. So just to say the least, the Chinese stock market is very different than the United States. First of all, it's not as heavy weighted in the economy, and also it's not the main place where corporations would have to get their funding from. And also not many Chinese households are really putting a large amount of wealth in the stock market. So all this just to say that stock markets up and downs are not going to affect the economy to a greatest extent like the United States. Then on top of this, I think with the government support, we're likely to see much more stabilization of the stock market. And going forward, I think, we just heard my colleague talked about the Chinese stock market is actually full of potentials with the DeepSeek shock, with the potential of technological innovations and growth going forward. We know that some of the estimates said that, the AI development is going to boost the earning per shares by 2.5% per year in the next decade. So I think many of the fund investors have talked about this, even though, in the short term, the stock market would be volatile because of tariff. But I think many believe in the long term, the stock market will perform well in China, even maybe better than the United States in terms of the growth potential. And so I think that would entice some of the investors to come back and buy at the dip. And so that also helped to stabilize the market as well.
And Dr. Zhou Mi, so what do you think are China's structural advantages in dealing with this kind of global economic turmoil brought about by the Trump administration's trade policies?
Well, in my understanding that China has a super large market that is the most important advantage of us. So I would say that in the future, we should try to put more strength on expanding the domestic market for the demand side. Well, it is true that China is still a developing country, but in this regard, we still have so many potentials to improve, like the integration among the different regions and provinces in China, and also trying to upgrade the manufacturing and also the consumption in China. I would say that a connection between the supply and the demand will be one of the much more potentials for us, for many of the enterprises involved in the international trade to think about. Maybe in the past, they can only think about how can they explore the markets in other countries, but now they should try to put more emphasis on analyzing the China's own domestic market. And the second direction, I would say that, we are still seeing so many potentials for collaboration between China and other developing countries in the world, even some of the developed countries, because we can share the common understanding about how can we fight against the climate change and how can we dealing with the digital economy or the challenge or the opportunities to do with artificial intelligence and other technology. There are so many potentials for us to use our efforts, our technology, our abilities to deal with situation, and that is definitely one of the potential that many Chinese companies can benefit from that. And I would say that China is a super large market. It's a one certain environment which is quite different or even opposite to the United States in this regard, in this time. So the companies who want to do more to benefit from a sustainable development, they can come here, no matter in China or in the other areas that we cooperate with our Belt and Road partners. I would say there are so many possibilities. We do not have to worry only the demand from the United States, but we are still in this position. I would say that we are still trying to connect with the United States because both of us are the most important economies in the world. We have to do a lot of things, no matter depend on the common environment, and we have to trying to find better solution to deal with some of these problems, some of these issues that we are not having the same answers.
And Yan, so let's talk about consumption. Will the global economic turmoil accelerate China's transformation into maybe the world's largest consumer market one day?
Well, I think that's a great question. I think if there's any silver lining is that the U.S.'s move to decouple itself from the rest of the world's trading system could present I would say, strategic opportunity for China, not only to work with the international partners, but also have some structural reform in its own domestic economy. We know for the fact that, the Chinese economy, when it comes to income growth for the families or in terms of their savings in the bank, they represent a lot of potentials for pent-up demand. So I think if the policies can be unleashed to stimulate consumer demand and more structural reforms can be implemented, then I think that would really likely to help to, like what Dr. Zhou Mi mentioned, to really expand the domestic consumer market. And so I think that does present a great opportunity for China to be able to do that. I think, to be honest, I think the trading system, China has been sending real goods and services, right, to the tune of $1 trillion almost dollars to the rest of the world, and a great amount going to the United States. I think, if this goods and services can be enjoyed by the Chinese people, it's not a bad thing. I think it's actually a good thing. Like we just talked about, consumption demand is not just a means to higher growth, right, to have demand boost, but it's also the end to itself, because this is how we can boost the living standards of our people. So I think, it does seem to me a good opportunity to have the kinds of structural transformation in the Chinese economy, even though I also need to make this point, right, that China's exports to the GDP ratio is actually 19.7%. Global average is 29%. So China is really not as export dependent as many people would think. China actually does produce a lot for its domestic market.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Zhou Si, Associate Professor at the University of Macau. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.